You know it, I know it. Things around the world are changing right now. Russia's invasion of Ukraine and the pressure it's putting on America's budget is one thing. Hamas's raid on Israel and Israel's response, with the dangers of the Middle East again heightened. In Australia, our participation in AUKUS shows our own geopolitical sensitivities. Well, Sally Old, the Chief Investment Officer at JB Weir and one of the most respected thinkers about our markets, believes these things are not random, but are related as part of a new global regime which will affect economies and the way you should invest in the future. I spoke with Sally Old just a little earlier.
This is really big picture thinking. And I think it's interesting and it's a fascinating time to be thinking and talking about it, because regime change, sort of almost by definition, don't happen very often. I mean, these big social, political, economic cycles are usually 30 to 40 years in duration. And, my interpretation of where we are is that we finished one basically 5 or 6 years ago. I think 2016 was a pretty significant line in the sand. We had Brexit, we had the election of Donald Trump. And I think that really marked the last years of the previous regime, and we are now in the early years of a new regime.
OK, so the previous regime, I guess, is low inflation, globalisation, free trade deals all over the world. In other words, this notion of the rise of China and the cheap products that came around the world, that also led to a situation where investors enjoyed really good returns during those periods of time.
Absolutely. So I think that regime started sort of almost back in the late 70s with Margaret Thatcher, Ronald Reagan, and that real push to embrace free trade, bring down tariffs, free movements of capital and labour all around the world. As you said, China got involved, they joined the World Trade Organization, and it was really the era of globalisation and a wonderful era for investors, basically. You had bull markets in a lot of asset markets, so we had a secular decline in interest rates, which was, I think, super significant. That provided a really lovely valuation tailwind to real assets, so things like equities, things like property, things like infrastructure. And so as an investor, it was sort of like the best of all worlds. You had declining interest rates over a multi-decade period, equity markets that basically re-rated higher or revalued higher as a result, and also, good gains in other things like property, infrastructure.
And even if you think about it, the emergence of some of those key technologies during that period of time that changed our lives, changed the way in which we think, and changed productivity. So you had the emergence of these new technology companies, the Googles, the Apples, the Metas, and now I kind of guess going forward there's going to be another generation of these new tech giants that will emerge in this next phase.
Yeah, so I think that was a really significant period through the 90s where we had the emergence of that technology, huge productivity boost in most Western economies. And I guess, that sort of petered out towards the end, and there was a lot of hand-wringing and continues to be about low productivity growth in a lot of economies, including our own. But the hope is that perhaps artificial intelligence is going to be the saviour of that story, and that's going to allow huge productivity gains across economies. And the reason economists get so excited about that is it effectively means we can grow the economy faster without having to worry too much about the inflationary impact of that. And so you get the best of all worlds. You can grow faster, you don't have to worry about rising inflation, and that's a pretty nice environment for it.
OK, so this regime change we're talking about now, where the world's becoming more protectionist, where you've got regimes such as China wanting to exert themselves, to India to a certain extent as well, Russia quite clearly trying to find its place in the global economy, but, quite clearly having the rest of the world turn its back towards it, the Western world. So how does that change, in your mind, the way in which we invest, the way in which we think about investment into the future?
Yeah, so I think we have to start by just acknowledging that the world is fundamentally very different at the moment. And I think that's probably something that will persist over the next decade and two at least. And as you said, it's not necessarily just about trading with whoever. We're now starting to care about our own national interest, and we are trading with countries that we also view as strategic allies. And so this is this term geonomics, which has come into circulation, where we start to look at economic policy subject to the geopolitics and strategic alliances. So you're not just doing it because, you think it's a great idea to put a factory in a low-cost manufacturing location. You are trading with the countries that, you have a relationship on some other level. And we've seen a lot of examples of that this year. So, just this week or last week, I think our government put to Parliament legislation to create effectively a free trade military trading bloc with AUKUS countries. So quite sort of unique and confined. And likewise, the US government has basically made special provisions in some of its import laws around Australia and our ability to export critical minerals to the US because...
Under its Inflation Reduction Act, that's the key. Correct. So Australia could participate in that as one of its key allies with the key materials that the US
wants. And that's to the
wants.
exclusion of other countries. And so we're starting to see almost a reversion to trading blocs as opposed to just a world of free trade where everyone abides by the laws of multilateral organisations like the World Trade Organisation. It's far more complicated than that.
Sally Auld, always good to chat to you, and many thanks for your time on the program today.
Thanks, Ross.